Good afternoon, everyone. Welcome back to Commodities Update video. And today we'll be looking at technical analysis on natural gas, traded with ticker for natural gas UNG, and oil, as well as the US dollar, gold, and silver. So we'll be looking at their support and resistance levels, as well as where's the most likely scenario price will be heading into later this week. And if you guys learn anything, feel free to like, share, and subscribe, as well as there's a free Discord link in my YouTube bio. Feel free to check it out and come join, hang out, talk, whatever. And the Patreon link is down below as well. You can support the channel or book any one-on-ones, as well as a 15-minute free one-on-one call down there in the calendar link if you guys want to learn how to better your trading. And let's get started. So we are looking at the lead time frame over the weekend where we broke bear out of this rising wedge. Support, resistance, broke bear. And last week we saw more follow through from bears, and we can see even more follow through today on Monday and Tuesday. So I talked about where the 8-hour EMA 12 is going to be our guide to resistance, because on the way up, it was starting to act as support, and on the way down, it was acting as resistance. So now we're seeing it acting as resistance again. So rejection there again, rejection there again. So pretty much 8-hour EMA 12 is going to be our guide overall. And we are pretty close to the low of the prior bounce. We had that news reaction there, and going down, we're probably going to head to that level very soon and test that level. Let's take a look at the unadjusted. Yeah, the unadjusted is getting pretty close as well. So if we break today's low, very good chance we come down to 1.62. And if we break that, we're going to come back down to pretty much 1.57. Let's take a look on the shorter term time frame if there's any signs of bounce yet. Let's see. I'm going to say no, even though we had this 1% bounce. I mean, if the bulls can confirm a 15-minute uptrend, let's see. Initial bounce, 15-minute. Right, but that being said, if we can get over the 15-minute EMA 12, bounce above this prior high, 15-minute uptrend, maybe we'll see something shaping up on the hourly. But to have something shape up on the hourly, we need a 15-minute time frame to shape up even an uptrend, just to get the ball rolling at even like just a bare minimum at all. Because if you zoom out, right, that 15-minute bounce pretty much looks like nothing overall on the bigger picture. So 15-minute uptrend confirms, then we'll start talking about potentially confirming hourly uptrend. This bounce was big enough for the hourly uptrend to confirm, but bulls didn't really play defense here and roll over. So start back to square one. You need a big enough bounce on the hourly to potentially have space to change the trend to hourly uptrend. This is a big move up. No trend change, no pivot set, and it rolled over. If it set a pivot there and made a higher high, higher than prior high, then that's hourly uptrend confirming. Much bear just all the way through and made a lower low, lower than the prior low. So now bulls are back to square one. As long as if this just chops around here in this little area, that's an hourly bear flag. And we come back down, and then next thing you know, we broke that low. That's hourly bear flag confirmed. And then we're probably likely coming down to the news reactions low, which is closer to this 1.62 and 1.57 range here. We can see there was a lot of volume traded here. So we're likely coming down to test that level if this bear flag ends up playing out. If 15-minute uptrend confirms, then maybe we'll negate that bear flag, but then we'll be looking out this 4-hour EMA 12 as resistance. 4-hour and 8-hour both works. It's currently acting as resistance on the EMA. All right, let's take a look at UNG. UNG, similar, pretty much follows net gas. Let's delete this. So that's pretty much same idea. Broke out broke out of the rising wedge bear as well, and we're getting bearish follow through, pretty much getting closer to low of the day. So net gas tries to hit that reaction low, then we will get UNG also hitting this reaction low range. UNG right now is still in a net gas and UNG both are still in a weekly bear flag at this moment, and it's starting to pretty much play out. Break the low of this February 20th week, then the bear flag is confirmed. Right now, it's just flagging top of move to bottom move. You can see we only bounced close to 23.86%, and it's just flagging right now. And if it breaks below, that's a bear flag confirmed. How weak this bounce is compared to this whole drop. If you don't get over $2.2, which is 0.382, it's going to be still a bear flag. And similar idea to UNG. You can see that this entire drop is the pole, and this was the flag. And if we break below the low of that pole, then it's a bear flag confirmed. If that happens, I'm looking down close to, if we break this low, I'm looking down close to $13.4, this red line here, which will also coincide with the black line. Black line is actually more clear on the unadjusted. Yeah. TradingView sometimes just moves the lines. Let me adjust that real quick. Closer like that. Anyways, see, pretty much we bounce. So if we break the reaction low, then we're probably gonna come down to that black line, close to it at least. But there is a lot of support, which is these three blue lines, which is historical lows in the 1.5s range. So we'll see if we can even bounce from there if we break this low. If we can, that's a good sign. If not, then we're probably gonna head to the black line. So we'll see. All right, let's take a look at oil. Oil, let's see, on the daily, it's doing nothing still. Ever since we talked about it last time on the weekend, it was over here, and today it's close to here. So same idea, exactly the same thing. Nothing happening on oil. We bounced back above resistance, broke above it, zero follow through after we got to this next level of resistance, which is all these volume here. Couldn't get above that. Now it came down, bounced from it. Now it's acting as resistance again. So this level is now acting as resistance again. You can see today, couldn't get over it again. So chances of it coming lower is higher than actually us going back up, because we came up here and tested it here again. So if we break Monday's low, we're probably coming down to 71.51 due to the rejection of this level again today. See, bulls can hold Monday's low. Maybe it'll come back up to test this 74 level again. But if we break Monday's low, we're coming down to the 71.5 zone. US dollar here. Let's see, small bounce today. Yeah, so we broke through the maroon looking line support. Support all this way down here. Support there as well. Support. And now we're just backtesting it. So push through it. Support is now going to act as resistance. So when we bounced up to it, because price is below it, now it's acting as resistance, and which is sometimes it can come back up. Bust through it, it'll be a fake out. That means it's a fake out, but on the back test and rejection, so that's a good sign for the bears, dollar bears at this moment. So the most likely scenario, we're probably going to come down to test this structure closer to 1.2, 102.5, and 102.3 range, which is this level. We need to break a low of today, though. The low of today is 102.72. So if we break low today, we're probably coming down to here. And if we bounce again, we'll test exactly which this spot where we're high of today was. If we can break above that, we are coming up to 103.6, which is this structure. Gold. All right, so we broke above the all-time high resistance, which is this black line. Resistance, 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 broke above. Came back, back test. So right now it's the back test. So let's see if the bulls can hold it and bounce from here or form something like a sideways range. Even if we come down below slightly a little bit, it's fine. As long as we, head sideways a little bit here around this level. No red flags. It could be a bull flag for all we know. Measure from the bottom to the top. Yep, not even close to 0.382 yet. So even if we come all the way down here, it's still a bull flag. So let's say we come down here a little bit more, and then we bounce and we kind of just go sideways for probably waiting for more data from the markets, economic data, and then next thing you know, we head up or we break below. If we break below, that's a bull flag negated. If we break above again, that's a bull flag confirmed. Right now is just doing its thing. Just some kind of consolidation, after a 11% move up on gold, which is very significant for gold. A little drop on 1% is nothing at this moment. So even if it drops a little bit more, it's still okay. As long as it doesn't like retrace over 50% of this move, that will start to shape up a big red flag. All right, let's take that silver. Yeah, same price action as gold. Big move up. Hits resistance. Now we're just pulling back a tiny bit. And so yeah, we couldn't get over 24.6, which is this structure, this structure, this structure. So you can see it was acting as price support. Then when price is below it, it acts as resistance. And you can see acts as resistance as well. Resistance over here, so it's acting as resistance as well. So if we flag around here a little bit and gold gets another pop, then silver goes as well. And so you can break that resistance. If we do break it, I'm looking at $25 range. But if that flag gets negated and the dollar bounces, then this will be a failed bull flag, and we're probably coming down to 23.7 or closer to 23.4. All right, that's all for you guys. If you guys learned anything, feel free to like, share, and subscribe. I will see you guys either Saturday or Thursday for more updates, and have a great rest of you guys this week.